Two business owners, same $100,000. One pays $15,300 in self-employment tax. The other pays $4,800. That's not a typo. That's not a tax loophole for the rich. That's an election you can make on a one-page form. I'm going to show you exactly why the S-Corp election costs about $6,100 to set up, and why 83% of solo business owners only find out about this after they've already overpaid for years. Let's start with what most people do. You're a freelancer, consultant, Uber driver, realtor, doesn't matter. You get a $1,099 NEC. You file Schedule C, your profit is your profit. Simple. But then comes the bill. 15.3% self-employment tax on every dollar of profit. That's Social Security and Medicare, both halves, because you are employer and employee. On $100,000, $15,300. Before you even touch income tax. Now here's where it gets interesting. Same $100,000, same business. But you elect S-Corp status. You become an employee of your own corporation. You pay yourself a reasonable salary, let's say $45,000. You take the remaining $55,000 as distribution. Here's the magic. Only the salary gets hit with that 15.3%. The distribution? Zero self-employment tax. So you pay Social Security and Medicare on $45,000, not $100,000. That's about $6,850. Plus, wait for it, the employer half of payroll tax is deductible. Your actual payroll tax hit? Roughly $4,800? $15,300 versus $4,800. That's a $10,500 swing on the exact same income. But wait, you knew there was a but. The S-Corp election isn't free. You need payroll. That's roughly $1,000 to $2,500 a year for a service or software. You need a separate tax return, Form 1120S. That's another $2,000 to $4,000. You might need a CPA to navigate reasonable compensation rules. Add another $2,000 to $4,000. Total setup and ongoing cost, about $6,100. So at $100,000, you're breaking even or slightly ahead in year one. But here's what nobody tells you. The real benefit compounds. At $150,000, you save about $15,000, $200,000, over $20,000 a year. And that's why the 83% statistic stings so much. Most solo owners learn this from a friend at a barbecue, 3 years too late, after they've donated an extra 30 or 40 grand to the IRS for no reason. The salary question is where people get tangled. What's reasonable? The IRS doesn't publish a magic number, but they do publish data. They look at your industry, your location, your hours, your profit margin. If your S-Corp makes $100,000 and you pay yourself $20,000, red flag. You're buying an audit to save a few grand. Not worth it. The sweet spot? Typically 50 to 60% of profit is salary, the rest distribution. Document your reasoning. Use Bureau of Labor Statistics data. Write it down. The S-Corp isn't a secret. It's a tool. Use it wrong, it breaks. Use it right, it pays. One more trap, the election timing. You have to file Form 2553 within 2 months and 15 days of your tax year starting. Miss that? You wait until next year. Another year of Schedule C pain. For existing LLCs converting, there's a late election relief if you have a good reason. But don't count on it. Let's talk who this actually fits. Single-member LLC making over $75,000 in profit. Start looking at this. Over $100,000, you're probably leaving money on the table without it. Under $50,000, the math gets thin. The costs eat the savings. States matter too. California charges an extra 1.5% RI% on S-Corp income. New York has similar frictions. Tennessee, Texas, Florida. More friendly. Run your own numbers. The emotional side hits harder than the math. There's something brutal about realizing you paid $10,000 extra in tax because nobody told you a form existed. It's not about being smart. It's about information access. The tax code is 17,000 pages. This one page? Buried in Chapter S, Subchapter S of all places. I want to close with the actual mechanics because knowledge without action is entertainment. Form the LLC first if you haven't. File Form 2553 for S-Corp election. Set up payroll with Gusto, ADP, or your CPA. Pay yourself monthly. File quarterly 941S. File Form 1120S by March 15th. Take distribution after payroll runs. Document everything. That's the system. That's the machine. 6,100 to set up. 10,000 plus saved annually at scale. The break-even is real. The regret is realer.